Good morning, family. Happy Monday. Hope y'all had a good weekend. Hope y'all are excited to trade. So here's the scoop. Obviously, a lot of craziness going on right now outside the market. What we want to do as traders, guys, is focus on the things that always matter instead of trying to, come to assumptions of what we think the market should do based on everything that's going on. So, though it can be a little bit difficult, what I want to do with you guys this morning is kind of tune out the news and rather just focus on the market itself and what the market has given us. So with that being said, let's jump in. Before we get going, guys, if you want, you can follow me here, FTM Alerts on Twitter. I'll post a link in the description of this video. These are not to be taken as trade alerts or signals. Rather, if you guys want to kind of follow along and keep tabs on what I'm personally trading and get a sense of how you can apply the strategies and just the mindsets that we cover here in the videos, give me a follow there on Twitter. But with that being said, team, kind of take a look at the market right now, and we're not getting anything to work with. So the month of September for a lot of traders, unfortunately, was a month where a lot of profits were given back. The thing about that is, though, guys, it doesn't necessarily have to be that way. We as traders need to be flexible in our ability to play what the market is giving us. So you guys know I'm a huge basketball fan. Use the analogy of a guy like a Kobe Bryant, for example. Kobe was a guy who had the skills to drive to the hoop. He could back you down and do the fadeaway. He could pull up with a quick jumper. He had the skill set to thrive in any environment, but what made him really good, like other good athletes, is that he let the environment dictate what he was going to do, right? He would take what the defense was giving him rather than catching the ball and already having an assumption of what he was going to do. As traders, we need to have skill sets where we can profit consistently when the market is in a nice uptrend, such as the one that a lot of new traders know, in a downtrend, and in a choppy ass environment like the one that we're seeing right now. So the month of September, guys, you can still be consistently profitable if you can accept that the environment has changed, if you can trade what the market has given you, and if you can use strategies that make sense given the current context of the market. So regardless of everything going on right now, to be honest with you guys, we're just in a total chop fest right now. Now you get the nice relief bounce here last week as the selling pressure dries up and everything kind of reverts back to the mean, but we're all over the place, team. Futures are up a good 1% this morning, but even this nice gap up is not going to get us out of this range. So I really urge you guys, respect the market and respect the fact that right now we are just stuck. So here's the thing, where a lot of traders are kind of getting their ass handed to them is still continuing to focus on the names that were making beautiful moves in June, July, and August, but the market has changed, guys. And something I want to show you, I know a lot of you are familiar with the TTM squeeze indicator. Check this out. This might give you a little bit of perspective on this market. Alright, so check this out, guys. I love this stuff. So real quick rehash here for those of you who aren't familiar with the squeeze, and I'll post the links in the description to a couple of my videos, but this is by far, guys, my favorite setup. So make sure y'all check out Simpler Trading here on YouTube as well. They can teach you a lot more about the squeeze than I can. But take a look, team. Alright, quick little rehash. The light blue bars on the squeeze indicator, that means that we're seeing a release of energy to the upside. Or in other words, we're in the presence of bullish momentum. When the light blue bars begin to turn to dark blue, it means we're losing that momentum. In a lot of ways, guys, that's the end of the move. So check this out. Take a look at a big name like Amazon. Leading up, guys, here to the month of August, we started losing all that bullish momentum. Take a look at, say, a name like Apple. Same thing here. As we enter August, we begin to lose the bullish momentum. And take a look, guys, even at the indexes. As we enter August, which was one of the best months the market's seen this year, obviously, we're losing all the bullish momentum. So you guys have got to accept the fact that the party, in a lot of ways, is over right now. We lost momentum. This big bullish move here on the weekly chart started dying out back in August. And that means, guys, that if you are still looking for the trades and setups on the stocks that were making you money in June, July, August, you're not adjusting to the current market environment. So here's my suggestion. While the market is kind of just really sloppy banging back and forth, we can still find some beautiful trends. Now to me, guys, a stock in a beautiful trend, first and foremost, is holding well above its 21 EMA. And all pullbacks are held up at the 21 EMA. Just a nice, easy concept of reversion to the mean. So take a look at a few of these. While the market's kind of getting tossed around like a rag doll, you get something like a Peloton. which really has been in a beautiful trend here. Runs away from the 21, you get the reversion to the mean, but it holds up well and continues its next leg to the upside. So in the midst of all the sloppiness, there's names like Peloton. There's names like Pins. There's names like a couple of newbies here, D-Dog, making very nice moves to the upside. And then you got a lot of names, say like a DocuSign, holding up beautifully back above the 21 EMA. You got stacked moving averages, a name like Salesforce, holding up beautifully above the 21 EMA. You got stacked moving averages. And then names, guys, like AMD and NVIDIA. All these names holding up well above the 21 EMA. You got the stacked moving averages, and they're showing signs of potential momentum to the upside. Meanwhile, everybody's favorites, the big tech here, very, very sloppy. Just having a tough time holding above the moving average. The moving averages themselves are not stacked. You gotta play where the momentum is, guys, especially if you're looking for those directional trades. So here's my thoughts right now as far as what am I focusing on trading on and what am I not looking to trade. If I'm going to take any kind of directional trade, I mean, the first thing I have to do is respect the environment. There are some environments, in my opinion, team, that are better suited for, say, buying naked calls or possibly rather, trading debit spreads, but we always need to take the big picture of the market into context. So it's very important right now that we realize the market is in a total chop fest. And if, again, we pull up the squeeze indicator, I don't want anyone in the group or you guys who follow here and, fooling yourselves into thinking the market's bullish right now. Take a look again at the TTM squeeze indicator. Market gets its butt handed to it, but we get the nice relief bounce here as all the selling pressure begins to get exhausted, which is represented by those red bars turning over there to the big bird yellow. So we're not in the presence, guys, of bullish momentum. At the same time, the bearish momentum has kind of came to an end and dried up, at least for the time being, and we're starting to head into a bunch of daily squeezes. You can see on the SPY here, the Bollinger Bands are slowly starting to contract. In the process of going into a daily squeeze, we're typically going to do nothing but chop back and forth. Take a look at the Qs. We are in the process of going into a daily squeeze. Big old favorites like Tesla in the process of going into a daily squeeze. Pretty ugly right now. And then even names like Amazon. So take notes on this, guys. The indexes and everybody's favorites, the big tech stocks, they're looking more likely, based on the lack of bullish momentum, based on the fact that they're entering daily squeezes, to do nothing but chop back and forth for a bit. And I'll be the first to admit I'm wrong, and it's not that I'm going to completely tune out the tech names, but I'm a fan of taking the path of least resistance. I love trading Amazon, Google, just as much as the next guy or girl, but only when they're necessarily in play. So while the tech names here, guys, might take a couple of weeks, maybe even longer, to continue to kind of chop back and forth, ultimately the Bollinger Bands tighten up and we get some beautiful daily squeezes. In the meantime, I'm looking for names that are setting up a bit better, holding well above the 21, looking for potential moves to the upside. So a couple of positions I have right now, guys. One of them is in Salesforce with a nice put credit spread. I've also got a put credit spread here in DocuSign, and I got a put credit spread here in AMD. So let me show you guys a spreadsheet right now. Alright fam, so here is my book of business. Now obviously anybody can put together a spreadsheet and punch in any numbers, so that's why I suggest y'all do follow that Twitter page I suggested. I'm going to post my entries and exits, and you can check us out at focustrades.com, take a free trial to the group where you can see me taking all these trades in real time. But last week, guys, I was able to close $6,500 of profit. You can see all the positions I closed there, and heading into this week, 3 open positions, all of them put credit spreads with a max potential profit of just about $8,000. So we have got October 30th expiration AMD put credit spread. I sold the 77 puts, bought the 76, just about $4,000 a max profit. For DocuSign, October 16th expiration, sold the 200 puts and bought the 190s. Went a little bit wider there, about $1,800 max profit. And then for CRM, went with October 16th expiration, just about $2,200 to open profit. So I'm a big fan here, guys, of finding good looking setups, quote unquote planting my seeds and putting myself in a good position to come into the next week looking to collect some premium. Many of my positions last week, whether it was Amazon, Google, etc., a lot of them were taken in the week beforehand. So I'm able to roll into last Monday in really good shape to collect some premium. So I'm going with put credit spreads mainly right now because of the overall market environment. If we were looking at a month like August, let me play a little bit more directionally. Let me do debit spreads. Let me get the naked calls. In the midst of the choppiness, I just get a little bit more peace of mind, guys, holding on to put credit spreads. So for me, the risk management is pretty simple. I'm willing to hold these positions as long as they're holding above the 21 EMA. By design, that's where I decided to short puts, underneath the moving average. And regardless if I'm break even, small profit, small loss, big loss, whatever the case may be, I'm a fan of taking trades off when I'm wrong. On DocuSign here, guys, we end up closing back above, or I'm sorry, I hope we continue to close above. We close under that 21 EMA, I'm wrong. Taking it off with no hesitation. Salesforce, we end up closing back above that 21 EMA, I'm wrong. Don't care what happens the next day, taking that position off. So I'm looking for these trades to work sooner rather than later. Of course, we have the benefit of the credit spreads, so we can collect premium in the chop. We don't necessarily need a directional move, but I'm not going to hold on to the trades if they're not working. So same thing here, guys, with AMD. Expecting this at bare minimum to hold up above its 21 EMA, and that puts me in a good position to collect the premiums. In the event we close underneath it, goodbye to that position. So be patient this week, guys, and do your best to, acknowledge and be aware of what's going on outside the market, but don't necessarily let it dominate your, your decision-making process. In this kind of environment, a lot of assumptions can be made, and typically those assumptions are going to get you into trouble. So focus on the foundation, guys. Look for clean setups above the 21 EMA, showing signs of strength in the midst of the choppy market. Focus on the internals like, say, the volatility index, the VIX. If volatility is not spiking aggressively, there's a decent chance, guys, we're not going to plummet. Now, in the event that VIX begins to spike through the roof, you might want to be a little bit careful about leaning towards the upside. So focus on things like VIX. Focus on things, guys, like $ADD. Focus on things like the tick. Take what the market's giving you and work based on that versus making assumptions and taking trade decisions based on what you think the market should do. So, as always, guys, I'll keep you all updated on my open positions. To be honest, I'm coming into today's session in observation mode. I like the positions I have with the market gapping up here this morning. You can see the SPY futures up about 1%, the Q's up 1% and change. This is going to put me, I'm guessing, in decent shape on those credit spreads, so not looking to force the issue. Mainly going to focus on working with the group this week, helping them become better traders, and just managing the positions that I have. And hey, if anything that's A+ is presented, I'll be the first one to jump on. So I appreciate y'all for watching. I hope you guys kick some ass this week. If you haven't already, subscribe, and I'll see y'all in the next video.